So welcome in the next unit and also in the next video. We finally reached the entry unit. In this unit, we will talk about the entry types, such as change of characters, flips, and concatenations. Okay, first let's talk about the change of character. What is a change of character? When the market structure changes to bullish from bearish, or changes to bearish from bullish. So basically, it's the change in the overall trend. So as you can see on the first example here, we can see a bullish structure because price is creating series of higher highs and higher lows, breaking structures to the upside, creating demand zones over and over again, breaking through weak highs, breaking through supply zones. So it's a bullish structure. This bullish structure can change into bearish structure if price, on the second example, if price breaks through the last demand zone or breaks through several demand zones. We'll talk about the entry criteria later. So as you can see, price broke through the last demand zone, which was here, because this demand zone created an efficient push to the upside, broke structure. So price broke through this demand zone and this demand zone also. So this means we have a double change of character here, the first one, and here the second one. After this, we can write the expectational order flow. And as I always say, if a zone breaks, then an opposite side zone will be automatically created. So price broke through several demand zones, so supply zone has been formed, which is here. Let's say it's here. After this, we can write the expectation order flow, and if price reacts on this supply zone, we can happen a trade. After this, we can expect the break of structure to the downside over and over again, which you can see on this example. So as you can see, price was in an uptrend here, price changed character here, because it broke through the last opposite zone, which was a demand zone. So if price breaks through a zone, an opposite side zone will be created. So it created a supply zone up here. Let's say price reacted on this. After the reaction on this supply zone, price broke structure to the downside here. It also broke the weak low. So it created a strong high. This is our strong high. After this, price did a pullback again here, reacted on another supply zone. I will just mark it, sorry. So reacted on another supply zone. After it broke structure to the downside again. So as you can see, the overall bullish structure changed character, changed into bearish structure. So change of character is basically changing the overall trend from bullish to bearish or from bearish to bullish. Let's say price changes character to the upside again. And I will just mark this was the last supply zone because this supply zone created an efficient push to the downside, broke structure to the downside. Let's say swap some liquidity from this region. So we have this supply zone right here. Price breaks through this supply zone, which means it will change character to the upside. And it does not tap into any unmitigated zone because as you can see, this supply zone was already mitigated by this movement. So it does not tap into any unmitigated supply zone. So this means a demand zone will be created because price broke through a zone, then an opposite side zone will be automatically formed. This is a golden rule. You just have to memorize this. So price created a demand zone because it broke through a supply zone. And after this, let's say this is a 1 minute chart. You can enter on this demand zone in a trade and you can write the expectational order flow. So price has a great chance to come back down to this demand zone, react on this demand zone. After the reaction on this demand zone, you can hop in a trade. This is the power of change of characters. But let's talk about the change of character criteria and how to actually use them to our advantage. Okay, let's see a concrete example and the criteria. So as you can see on this first example, first image, price is moving in a downtrend. So this is the 15-minute chart, and this will be the 1 minute chart. So as you can see, price is moving in a downtrend, creating series of lower lows, lower highs, respecting supply zones, breaking through demand zones, and breaking structures to the downside. So this is the overall 15-minute structure. And as you can see, this supply zone has been created because it broke structure to the downside with inefficient movement. And on the way up, it created liquidity for this zone, as we talked about in the liquidity units. So it created perfect liquidity for this zone. Price swept this liquidity. After the liquidity sweep, it tapped into this supply zone. It's on the 15-minute chart. So as you can see, this leg will look like this on the 1 minute chart. This pullback will look like this on the 1 minute chart. And this upside leg will look like this on the 1 minute chart. So price tapped into or almost tapped into this supply zone. It's on the way up to mitigate this supply zone. It's swept the liquidity also. So let's focus on the 1 minute chart. As you can see, after the liquidity sweep, price created series of higher highs and higher lows, but the overall structure is bearish, as you know, because the 15-minute structure here, we can easily read that it's bearish. So we won't happen a long trade here because we will know that price will react on this supply zone. And after the reaction, we can enter in a short trade and ride the expectation order flow, which is bearish. Okay, so let's see the criteria. The first criteria for the change of character is the higher time frame mitigation. So as you can see, I will just write it here. This supply zone is the 15-minute supply zone. So on the 1-minute chart, a 15-minute supply zone will be a higher time frame mitigation. So if price steps into this supply zone, the first criteria will be fit. Okay, let's see the second criteria. Liquidity sweep. It's an optional extra confirmation. So what do I mean under liquidity sweep? As you can see, price created a series of higher highs and higher lows here in this region, and just below the supply zone, price created double tops and also triple bottoms. So just under the supply zone, 50-minute supply zone, we have liquidity. If price sweeps the double tops, we will have a liquidity sweep, a strong confirmation, and after the liquidity sweep and the double top sweep and the higher time frame mitigation, price can reverse, sweep the downside liquidity. So these triple bottoms, it can sweep the downside liquidity. This is the 1-minute chart. And after this, price can create a supply zone because we had this demand zone right here. This was the last demand zone because this demand zone created inefficient push to the upside. It swept liquidity and it also broke structure to the upside here because this was the last high. So this demand zone has all the three criteria. And this supply zone, I will just mark it with a box. So this supply zone broke through this demand zone. And as I always say, if a zone breaks, an opposite side zone will be automatically created. So price broke through this demand zone, a supply zone was formed here. And after this, you can hop in a trade, you can set an order on this supply zone because a change of character happened after a higher time frame mitigation and the liquidity sweep, double liquidity sweep, or also triple liquidity sweep. So this is a really, really, really strong confirmation for the short entries. So yeah, price broke through this demand zone, created a supply zone. You can easily set an order on this supply zone. And the third criteria, it's also an extra confirmation, the double zone break. If price breaks through double demand or supply zone. So as you can see, we have this demand zone here also. So this is the first demand zone up here. This is the second demand zone down here. If price breaks through this demand zone also, that will be a really, really strong and great confirmation for the short entries. And let's see, price only created this supply zone. It broke through these two demand zones with an inefficient huge push to the downside, and it created this supply zone. You can also enter on this supply zone because price will have a great chance to come back after this supply zone and fill up the inefficiency, fill up the orders, collect the orders, tap the order block and the supply zone. So yeah, this is a really, really strong confirmation. So once again, the three criteria. The first one is unnecessary. I mean, it's necessary. The higher time frame mitigation, it has to happen. Without a higher time frame mitigation, it won't be a change of character. It will be just a liquidity sweep or anything like that. So it has to mitigate a higher time frame zone. The second one is a liquidity sweep. It's an optional extra confirmation. So it's a really, really good confirmation, and it almost has to happen. And the third one is the double zone break, and it's also an extra confirmation because that will be, you will be more sure about your trade and your position if it breaks through several zones, 2 or 3 zones. Okay, let's see an example for the double zone break. So the scenario is the same. Price broke through the last demand zone, which is this one, created this supply zone. After this, price started to do a pullback here, but it couldn't mitigate the upper zone. Instead of mitigating the upper zone, it created liquidity. And after the liquidity creation, it broke through the next demand zone, which is this one. It broke through this demand zone with this movement. So a zone has been broken. So this means an opposite sign zone will be created, which is this supply zone. Okay, so the first zone, the upper zone, is the extreme zone. We call it as an extreme zone. The downer zone, this one is the decisional zone. So I will just write it here. This is the extreme, and the downer is the decisional. Okay. So as we talked about the liquidity unit, price built up double taps liquidity for the extreme zone, as you can see. So you can't really open a position on the decisional zone because it has a great chance to sweep the liquidity and you will be part of the liquidity. So you can't really put an order limit on this zone because you will be swept and the extreme zone will be mitigated. And after the extreme zone mitigation, you can set an order on this zone and you can hop in a trade. So yeah, it is a really, really important part that you don't want to become part of the liquidity. You always wait for the liquidity sweep. So you see double taps here. A lot of early sellers will enter on the decisional zone. So lots of orders will be placed on this zone, and price will sweep the orders, sweep the stop losses, and mitigate the upper extreme zone. Okay, this is the first scenario. The second scenario is that price doesn't create liquidity. It just does a pullback. It doesn't create liquidity, but breaks through another demand zone. Let's say it breaks through +1 demand zone, so this downer area too. So it has double zone break also. In this case, you can safely use the decisional zone because the extreme zone has no liquidity. As you can see, decisional zone is safe to use because no liquidity has been created below the extreme zone. And we have one more confirmation for this decisional zone use. If price creates a pullback, it creates liquidity, then you can easily and safely use the decisional zone because price built up liquidity for the decisional zone. And more likely, this decisional zone will hold the price after the liquidity sweep. So if price sweeps the double taps from this region, this decisional zone can easily hold the price, and it doesn't really have to mitigate the extreme zone because liquidity have been swept. This is the next zone after the mitigation, after the liquidity sweep. So you can easily set an order limit on this decisional zone, and you don't have to wait for the extreme mitigation. Okay, let's see a complete example. So we have a criteria for the zones here. If you see a 4-hour zone, you will have to wait for a 15-minute change of character inside of the 4-hour zone. So as you can see, we have this 4-hour structure here, breaking structures to the downside, creating a series of lower lows and lower highs, and creating supply zones. Price created this 4-hour supply zone, and price just tapped into this zone. This will look like this on the 15-minute chart. So this leg and this leg will look like this on the 15-minute. Okay, price reached the 4-hour supply zone here, tapped into this 4-hour supply zone, and you will have to wait for a 15-minute change of character. So as you can see, this was the last demand zone that created a new high with inefficient push and break of structure, and this demand zone caused the tap of the supply zone, the 4-hour supply zone. You will have to wait for a 15-minute change of character here. So this is the 15-minute chart. Price changed character on the 15-minute and broke through the last demand zone, which means a supply zone will be formed, and it was formed here. Okay, so this movement, this downside and upside movement will look like this on the 1-minute chart. So after price mitigated the higher time frame 4-hour supply zone and broke structure or changed character to the downside and broke the demand zone, it created a 15-minute supply zone, which is this one and this one. And on the 1-minute chart, you will have to wait for a 1-minute change of character inside of that 15-minute supply zone. So price is moving in a downtrend here, which is this leg of the 15-minute chart. And after it creates a pullback, moving in an uptrend here, which is this leg of the 15-minute chart. And it almost reaches the 15-minute supply zone. This is the 15-minute supply zone, almost reaches it, creates double top, sweeps the liquidity to the upside, taps into a higher time frame zone, which is a 15-minute zone. So two criteria are fit: higher time frame mitigation, liquidity sweep. And after this, price breaks the last demand zone, which was the last demand zone that caused the tap of the 15-minute supply zone and the break of structure and the inefficient move. So price breaks through this zone. This means a supply zone, a 1-minute supply zone will be formed here, and you can safely use this 1-minute zone to enter in a position, and this will be your entry point. So once more, if you see a 4-hour zone, you will have to wait for a 15-minute change of character inside of that zone. If you see a 15-minute zone, you will have to wait for a 1-minute change of character inside of that zone. This is a golden rule. Okay, let's see a live example for a change of character. As you can see in this region, price is moving in a left trend, creating highs, lows, highs, potential lows, potential highs. So the expectational order flow is bullish. This is the 15-minute chart. So as you can see, this was our last structural high point. This was the last structural low point. Let's find the demand zone that broke through the last structural high point. That's fat liquidity and created inefficiency. As you can see, we have inefficiency in this region, huge inefficiency. And actually, we can mark this candle out as our demand zone because the break of structure and the inefficient move came into the market from this candle. So it broke structure here. Why cannot be replayed? What just happened? Sorry for this mistake. So yeah, the break of structure happened here. Inefficient push came into the market here. And this demand zone actually swept liquidity from this region. As you can see, we have double tops here. So this will be a really valid demand zone. We are expecting the tap of this zone. And after the tap of this zone, we will wait for a 1-minute change of character inside of this 15-minute POI, this 15-minute demand zone. And after the 15-minute zone tap and the 1-minute change of character, we can hop in a trade and ride the expectation order flow, which is bullish. Okay, so as you can see on the 15-minute chart, this looks like just a one big leg, and this will look like just a one big leg to the downside. But on the 1-minute chart, it will look like structure to the upside and structure to the downside. Let me just switch to the 1-minute chart. So as you can see, this is really just a structure, bullish structure, creating series of higher highs and higher lows, and the downside structure is bearish, creating series of lower lows and lower highs. Actually, we have a liquidity just above this zone here. So this is one more extra confirmation, and we have this liquidity trend line also. So this zone will be really valid. We can expect the tap of this zone, and after the tap of this 15-minute zone, we can wait for a 1-minute change of character, and after a 1-minute change of character, we can hop in a trade. Okay, let's see what happens. Let's just play price forward. As you can see, it coming down nicely, almost taps the zone. And the tap of the zone happened, as you can see. And actually, this was the last supply zone here that caused the tap of the demand zone, because as you can see, it created huge inefficient push to the downside, and this supply zone broke structure here. And also it swept some liquidity from this region. As you can see, we have double or equal bottoms here. So this is our last supply zone. If price breaks through this supply zone, that will be our change of character. And if this supply zone breaks, the demand zone will be formed, and we can hop in a trade on that demand zone that was formed by the break of this supply zone. Okay, but right now, demand is in control. If price taps this supply zone, supply will be in control. That's why we have to wait for a change of character to let demand be fully in control. Okay, let's see what happens. As you can see, price tapped this supply zone and reacted on it. So supply took over control from demand again. So supply is in control again. Let's see what happens. Let me just play price forward. Okay. As you can see, price broke structure to the downside here and broke structure to the downside here. So I will just mark out the last supply zone, which is this one. If price breaks through this supply zone, then demand will be in control. If price reacts on this supply zone, supply will be in control, and we will have to wait for a change of character again. So two scenarios here. If price breaks through the supply zone, demand will be in control, and we can hop in a trade on the demand formed by the break of this supply zone. Or the second scenario, if price reacts on the supply zone and reaches deeper areas, we have to wait for a fresh new supply zone break, and after a change of character, we can hop in a trade. But the first criteria is fit because price tapped the higher time frame demand zone. Second criteria is fit because it's fat liquidity. And the third criteria is not fit because we did not break through double zones. But let's just see what happens. As you can see, price reacted on the supply zone, so supply is in control. Supply is in control. Okay, and demand took over control from supply because it broke through the supply zone, as you can see. So we can mark out the demand zone, which is this one here. Because as I said, if a zone breaks, an opposite side zone will be automatically formed. So as you can see, this demand zone created huge inefficient push to the upside, change character here, swept liquidity from this region because we have this double top here. So it has all the three criteria: swept liquidity, zone break, higher time frame mitigation, liquidity sweep on the other side. The only missing thing is that it only broke through one supply zone, but it isn't a problem because it happened with huge inefficient push. So in this case, we can easily set an order limit on this zone, and we will use 12-point pip stop loss. We will talk about the lot sizes and the stop losses in the money management unit. So we did set an order limit on this zone, as you can see, and our target point will be the next unmitigated 15-minute zone, which is this one here. As you can see, this is the next unmitigated 15-minute supply zone. So we can easily target this zone because, as you can see, it changed character to the downside here with inefficient movement. So this was the supply that changed character on the 15-minute chart. So this is a really, really valuable supply zone. So the target point will be this supply zone. Okay. For this trade, let me just adjust this. So for this trade, we have 1-to-9 risk-reward ratio. We risk 1% of our capital, but we will gain 9% profit. Okay, so let's see what happens. The position is all set. If price reaches this entry point, we will be tagged in the trade. So let's see. As you can see, price tapped this zone. We are tagged in the trade now. Let's see how it goes. Okay, strong reaction, really strong reaction. We are in profit, huge profit. As you can see, it also broke through the last supply zone, this huge supply zone that caused the tap of the 15-minute demand zone and breakout structure and huge liquidity sweep. So this is an extra confirmation because price broke through this supply zone, this valuable supply zone. We have a confirmation that the expectation order flow, which is bullish, will be continued. So we can easily target this supply zone, the upper 15-minute supply zone. Let's see what happens. And our trade is done. TP hit for 1-to-9 risk reward. So we just booked 9% of profit. This is the power of change of characters and waiting for a right zone to be tapped and the change of character inside of that zone. So once more, this zone has been created. Price reached this zone, switch to 1-minute chart, wait for the last 1-minute supply to be broken. Last 1-minute supply broken. Demand zone has formed. Limit on that demand zone, happy in a trade, TP hit. This is really simple, based on liquidity concept, supply and demand concepts, who's in control concepts, and this the combining all of the concepts together, it will be really strong, as you can see.